Scam Series 5, the central bank should change their mortgage lending rules. Hi, this is Justin from Money Bootcamp. Today's video was not part of the initial plan, but there was a bunch of news on this in the last week or two and a few people asked me about it. So there are some members of government, there are some lending institutions, and there are some other interested parties that are pushing for the central bank to change the mortgage lending rules. Let's give you a high level notes on this, very quick history. We'll flash through this and we'll get to what you should know. During the boom, there were relaxed lending standards and people were able to borrow based on fake income, declared income that wasn't necessarily fully accurate, and also the lending standards in the banks and other lenders relaxed, so people were able to borrow more, in some cases 100% of the property price or over 100% in some cases. The crash happened, a lot of people were unemployed, people in general were often not able to afford these high mortgages that they bought, especially when they relied on them having this imaginary income. After this, the central bank issued two rules for people then buying property who were going to use a mortgage. If you're getting a property in Ireland, you need to know these two rules. So basically, the first rule is around income. So you can borrow 3.5 times your yearly income, whether you're an individual or a couple that's joint income. So example, if you're a couple and you have a collective income of €100,000, 3.5 times that, you can borrow €350,000. The second rule is around deposits. This says that first-time buyers need to put down a 10% deposit and they can borrow the rest of the money. After this, second and subsequent buyers can borrow, but they need to put 20% of the sale price down, and investors need to put 30% down. What this does is it ensures that you can't borrow more than you can afford. Property prices become tethered to income across the economy as a whole. This also means that mortgage payments for most people won't go over 1/3 of their take-home income. I normally like to focus on evergreen content and information, but this is an important one and it's very relevant if you're trying to buy in Ireland. Basically, the rules work. There's been a load of research on this over the last few years. The central bank has multiple times shown that the rules are working, that house prices are stabilizing, that they're linked to income, so people can't borrow more than they can afford. Other institutions like the ERSI have also validated this and confirmed this with their own research. So it is provably working that people can't borrow more than they can afford to then pay back, and house prices are stabilizing because they're then tied to income. Research from the central bank has shown that first-time buyers are now less likely to default than second and subsequent buyers. And then because prices are linked to income, property prices can only rise if there are people with the income to be able to afford these prices. On Friday, November 22nd, 2019, the CBI released information where they basically confirmed all of this is still going on and this is still how it is at the moment. This is one of the reasons why second and subsequent buyers have to put a 20% deposit down rather than the 10% required for first-time buyers, who are much less likely to default. From the central bank figures released recently, they've also shown that at the moment, roughly 25% of afterpay income for people who have a mortgage is going to the mortgage payments. And if you look at a few years ago, this was well over 33%, and in the boom times it was much higher again. So that is another thing that is showing with the numbers that this is actually working. Hearing that the rules are working is great for the economy as a whole. It's great for the stability of the economy in the country, which is what the central bank is tasked with. So whereas the government can be short-term in their plans and often in their outlook, the central bank is separate from that, so they can step back and look at this from a more objective position. Basically, the rules work. There are lots of other issues right now when it comes to the rental market and when it comes to supply, but these rules have been shown to be effective, so it's probably more than likely they're going to continue for the coming years anyway, and that the other issues are more to do with supply side, affordable housing, government building, social housing, employment, centralising of jobs around Dublin and the greater Dublin area, and other issues like this that are kind of outside of the control of the actual central bank and the lending regulations. So, prediction from me is that the central bank is not going to change these rules massively in the coming years. Central bank is tasked with ensuring market stability, and this is something that has been proven to do that, so they're going to continue it for the meantime. Some of you may be thinking, where is the scam here? But the scam is the idea that these rules are holding people back. If these rules were removed like they were in the boom times, all it will lead to is people borrowing more and then the prices of property increasing towards what they can borrow. So you'll get into that same problem you had in the past. This has been a Friday video from Money Bootcamp. This is the 5th video of our scam series. If you like this video and you have other questions around personal finances, you can send me a message and I'll make a video soon. If you need to talk about your personal finance situation, your money situation and all, you can give me a shout at justin@moneybootcamp.com or look for more information on the website moneybootcamp.com. Money Bootcamp, learn money, live better.